greetings and peace and blessings be upon you. First of all, a big thanks to the organizers, UK Islamic Finance Council, the United Nations, and the Islamic Development Bank for the opportunity to say a few words on how we can do better in implementing the 17 SDGs from the lenses of Islamic finance. I've been asked to make the case for how SDG implementation in general and Islamic finance in particular need to urgently move from what is called a predominantly halal paradigm in Islamic finance, and halal means to be permissible and lawful according to Islamic law and jurisprudence in the practice of Islamic finance, to a paradigm shift towards what is called Tayyib. And Tayyib means essentially being pure and wholesome and closer to the ideals of the purpose of what is called the Maqasid Al-Shariah, or the higher order and purpose of Islamic law, which is to ultimately establish social justice in this world. This aspiration to move from being merely permissible or halal to the ideal of Tayyib is a concept that is foundational in our Islamic tradition, with the Holy Quran making reference to the word Tayyib many times. But I would go further to say that the notion of being merely permissible as a minimum standard to a more aspirational and holistic solution is also evidently an idea that is familiar to all of us, that is omnipresent and universal in all traditions and in the secular tradition. For example, when we hear of the phrases like substance over form, that it's not enough to be legal, but we need to be ethical, that we need to be true and fair, that we need to have justice and mercy, or to first do no harm and only thereafter to do good, that the aesthetic form needs to take into account the utility function and indeed of moving from good to great. These are indeed familiar and fundamental expressions at the heart of some of our most essential fields and disciplines in law, philosophy, auditing, economics, medicine, architecture, and business management. So ladies and gentlemen, if we take that as a foundational concept, that the times demand that we do not merely what is legal and permissible, but we really need to move to a paradigm that we approach the ideal of being wholesome, holistic, and with more impact. And therefore, we stand here today on the occasion of another United Nations General Assembly on the road and en route to COP26 later this year in Scotland. And of course, against a backdrop of multiple crises of climate, inequality, displacement, and indeed pandemic. We know that business as usual needs to be reviewed, and the challenges of our times will require that finance reclaim its role to be part of the solution and not to contribute to this crisis. In that regard, I think we should start by we must not understate the case that there has actually been a lot of progress on many fronts. And I would congratulate the United Nations on the very palpable raising of standards and acceptance on the SDGs, and before that, the MDGs. And in the world of finance, especially in the last few years, we have seen how the acceptance and awareness, and indeed some action from the ESG movement around responsible and sustainable investing and indeed impact investing has become more front and center these days. In Islamic finance, with the ideal of social justice as its anchoring principle, with its ideal of ensuring that wealth is circulated throughout society and that any forms of oppression, financial or otherwise, be removed, whether it's riba, i.e. usury, or any other practices that are deemed to be antithetical to trying to achieve a more just and merciful society. This has also made a lot of progress, especially in the last 40 years or so. So we do have positive developments and strong tailwinds behind us. However, we need to state, and I need to restate, that it is obvious that the scale, intensity, complexity and the interrelated nature of the multiple and parallel crises that we had described makes it that we need a more urgent, perhaps even radical and disruptive approach. And in this regard, from halal to tayyib, from good to great, I would like to first of all outline 7 essential transitions that we are going through at various degrees of intensity right now, but clearly we need to do this together. First of all, in business, it's good to report that to migrate from the axiom of a shareholder economy to a stakeholder economy. This is already moving. That means to say from just profits to profits with purpose, or even to profits through purpose. A corollary is in finance to migrate indeed to return or even to recapture the notion that finance is there to serve the real economy, which in turn then is to ultimately to serve a better society. There is unfortunately much evidence to the contrary currently. So we need to migrate. In investing, to migrate from being merely compliant to more responsible investing, and along the continuum to more sustainable investing and ultimately impact investing. In climate action and the environment, of course, there is the urgent transition to net zero, but also to drive greater awareness and indeed action on the relatively less attention, if not neglect, that's going on in the other aspect of environment, that is in biodiversity and nature. In human development, in all its multifaceted form, to continue the war against poverty, to heal the immediate effects of the pandemic, and to narrow the significant and widening inequalities within and between nations. Number 6, in implementing the 17 SDGs by 2030, I think it is clear that we need to also migrate to a deeper and broader conception of implementation, bringing a whole of society approach, using the full suite of levers from governments, multilaterals, businesses, the finance sector, philanthropy, and civil society. Indeed, today's summit is part of that effort, I'm sure. And finally, in Islamic finance, as mentioned, while much has been achieved, I think it is also true that we are some way away, and we need to move from being merely halal to the more ideal state of tayyib. The 7 transitions are by no means exhaustive, but they are fundamental, and indeed they are interrelated and mutually enhancing. Islamic finance and SDGs, for example, while necessarily not exactly the same, scholars are clear that they are indeed similar, and more importantly, they are compatible and they are also complementary. So to move forward, the 7 transitions, there are at least three headwinds that we are facing that I would like to highlight. And I call these 3 shades of green, a different kind of green. The first shade of green I would like to highlight is about greenwashing. As we know, this is where the movement around SDGs and ESG is good, but there is also palpable and perhaps some justified skepticism that a lot of this is so-called greenwashing. Indeed, the credibility and sustainability of the sustainability movement rests on our ability to overcome this. There are many tools that have been put into place, but we clearly need to overcome this together, right? Measurement, for example, is one of them. Regulation is another. The second term I would like to highlight is so-called green flagging, whereby I've coined this term to refer to the excessive labeling of products to be Islamic, green being the color of the traditional Islamic flag. So as we have mentioned, that a lot of this actually is more labeling in terms of form, legal form, rather than perhaps the real substance of tayyib, right? The third green I would like to highlight that we need to overcome is, if I may use the term, green spending. I think this is both to credit and perhaps debit what started out as a green spend put as far back as 1987 has effectively morphed into a practically permanent fat put, which becomes almost a one-way bet on capital markets, which has resulted in unusual and ultimately deleterious monetary policy, because this is the aquarium that holds all the other fish in the aquarium, so to speak, and much as whatever progress we make in terms of SDG, ESG, this is highly distortive. It will divert the area of investment. It will favor those with capital against those without, and it will contribute to all kinds of other distortions in the market. So finally, I just like to end with several practical examples and aspirations of how to move from halal to tayyib. Number one, there's some 3.7 trillion of assets under Islamic finance. However, the great majority of that, perhaps as much as 90%, is actually in what is called murabaha financing. With its structure, technically halal is often criticized as being more debt-like rather than equity and participatory in nature. So therefore, any endeavor to move to more ijara and musharaka structures, for example, which are more equity-based, or indeed private equity, venture capital, and crowdfunding would be a step in the right tayyib direction. Secondly, many Muslim countries actually have large sovereign wealth funds. The sovereign wealth funds perhaps should consider to move to become more like sovereign development funds, where the outcome is not just financial gains, but also to look at economic, strategic, and indeed societal outcomes, which will include many SDGs. Number three, that social impact sukuks should be used to fund both commercial and more developmental outcomes. We have done that in Malaysia under what Khazanah Sukuk Ihsan, for example, in 2017. Islamic social finance through waqaf, endowments, zakat, and sadaqah are also quite unique structures. And indeed, there are many examples of this being done to serve and reach out and ultimately hit many of the SDGs. Digital banks offer the possibility of using technology cleverly to reach out into many parts of the populace that is not reached by conventional or by Islamic banking currently, the unbanked, the micro SMEs, and so on and so forth. Finally, it's perhaps to consider also the idea of crypto stable coins, perhaps on Islamic financial tenets, anchored on an underlying such as gold, a digital gold dinar. So those are just some examples of practical applications. Some are already happening and some perhaps on our journey to move from halal to tayyib. So in the final analysis, I like to end with a quote from Adam Smith, who wrote Wealth of Nations, but he had written earlier under the theory of moral sentiment. He said that to restrain our selfish and to indulge our benevolent affections constitutes the perfection of human nature. Indeed, the Enlightenment and the Scottish Enlightenment that Adam Smith grew out of, basically, lest it be forgotten that he always intended capitalism to be within the moral sentiments and the moral philosophy that should be underpinning capitalism. Indeed, in Islam, we go and we agree with that sentiment of Adam Smith, but we also need to go back all the way from Adam Smith to Adam himself, our common forefather. And the two prophets from Adam to Muhammad ﷺ bookends the whole chain of prophets where the message was ultimately the same, which is to guide and locate us, human beings, in order that we can be good stewards on this earth. And in that regard, I think the endeavor and the integration between Islamic finance and the SDG agenda is a good one, and we should be scaling this together. Thank you very much.